We can make a big deal, David, about the downward estimates, but their income is still expected to expand 18% on average. So let's put that in perspective. But nonetheless, expectations are high in the stocks.
Expectations are somewhat demanding for most large cap tech stocks, but they've been delivering in terms of strong growth and far better growth than most parts of the overall U.S. equity market. So I wouldn't make too much of a deal about them taking down expectations. It's kind of that time of year where managements take a good look at 2018 and want to make sure it's well within reach. And my guess is they beat those expectations when the future quarters actually come.
I see. All right, a little bit of expectation management. Yeah, Mike, when you look at tech, where do you see the value in the growth? Is it in the FANG names?
Well, yeah, I mean, I think there's nothing bad to say about these stocks, okay, in terms of their fundamentals. The valuations could be questioned, but generally growth stocks are always expensive, and they're probably going to remain expensive. But I look at a stock like IBM, which has been left for dead. It's a huge part of the index, had a massive high volume breakout on what I would call were okay earnings. Okay, but this is a classic example of something that people don't own, that they might need to own because it's in their benchmark. So these are the kinds of things I like right now, because the market has played out, very much as we would have thought this year. A lot of the things that have worked, and so I want to go somewhere where people aren't. And I think that the lack of willingness to do that by a lot of investors, I think this is the kind of thing that can actually drive momentum in a stock like this for a while.
Well, let's go back to that Bank of America quote again. The Occupy Silicon Valley politics. The old school tech companies like IBM are untouched by that right now. Is that a positive as well? Well,
there's a couple things going on. First of all, expectations are very low, unlike the FANG stocks. Number two, margins have bottomed, and you have a rate of change. They're a big beneficiary of a weaker U.S. dollar, probably the most visible beneficiary of that. They manage that quite well. And you have lack of ownership. And yes, you don't have these issues around potential regulation, Department of Justice, monopolistic power, et cetera. And I say the last thing is that we're late cycle. I mean, this has been our call, and IBM is a classic beneficiary of capital spending. As companies need to spend money on things to make themselves more productive, IBM's right in the wheelhouse of that. So I think folks have forgotten about that. And by the way, it's a 4% dividend, not so bad.